Hello, my name is Fred Pollock. I'm the Chief Investment Officer from GCM Grosvenor and serve as the Portfolio Manager for the PE1 Trust. GCM Grosvenor is a global alternative asset manager managing $76 billion US, principally in the private markets, including over $36 billion invested across the US and Europe. Today, most private equity is owned by institutional investors, typically with allocations equal to or exceeding 15 to 20% of their total portfolio. The average individual investor or retail investor has no private equity in their portfolio or a very, very small amount. The opportunity is to earn returns that exceed that of the listed markets with more stability and more predictability. But the challenge has always been that there isn't a vehicle available to access that in a convenient way on market or off market for the retail or institutional investor. The PE1 Trust obviously was designed to solve that problem or begin solving that problem for retail investors. The current private equity environment is more challenged than before interest rates began to rise globally. What you've seen is the cost of capital for debt financing in the transactions is about 5% more expensive than it was before, and investors on the equity side in a private equity transaction are asking for more return, typically 5 or 6% in line with what you're seeing on the cost of finance. The net result of that is that valuations are lower and forward expected returns are higher. If you looked at the private equity indices globally, you'd see that they've sort of gone sideways for up to 2 years as that process has worked its way through valuations. And now you're starting to see us come out of it and enjoy these higher returns associated with the higher demands for capital. We've taken advantage of it at Grosvenor 2 different ways. One is we've allocated to some private credit. And the second way that we've taken advantage of it through secondary transactions. So there's a number of essentially people who own private equity who've decided to put that on market, and we've been able to pick it up at a substantial discount. And so not only are we buying private equity companies that are likely to perform better than they would have before interest rates rose, we're able to buy them at a significant discount to what we otherwise would be able to enter those companies. The NAV of the PE1 Trust, if you go back to 2019 when it was created, was made up of mostly cash, meaning that the vehicle was started, it had raised capital from the marketplace, the predominant asset in the trust was cash, and that cash was earning zero because we lived in a zero interest rate environment. If you fast forward to today, the trust is fully invested in private equity companies numbering a little over 500. They're producing substantial returns and returns on capital during this period of time. The NAV during that period of time at the beginning was slow to rise, but then experienced substantial growth in the period kind of 2019, 2020, 2021, 2022. And then since then has gone sideways, meaning the NAV hasn't really changed much since 2022 and most of 2023. That's been a process of digesting multiple different cross currents. The first, the Aussie currency is depreciated, so the US dollar assets sitting in the trust have actually benefited from that. The second is that we've grown cash flows in those companies or returned cash from those companies in excess of 15%. And then there's a third factor which is overwhelmed and offset the first two, which is that valuations have come down in private equity, just like they've come down in public markets for equities as a result of interest rates increasing. The nice feature of that obviously is that the forward expected returns have gone up. And so, the NAV went sideways for this period of 2 years. I think we're through that period and we've digested it. And then hopefully the forward expected returns associated with the NAV's evolution will be even more positive than what we otherwise would have expected before this rates increased. In sum, the PE1 Trust, since inception in 2019, we've been able to deliver on sort of a dollar cost averaging and building up of the portfolio. As of today, it's fully invested in over 500 high-quality private equity companies. We've been through a period of COVID, the post-COVID period where markets were relatively exuberant, as well as this period with rising interest rates and sideward movement in the NAV associated with less compelling valuations and lower valuations. The net of that, I'm actually pleased with what we've done. We've delivered on all of the promises we had in terms of the allocations in the trust. We've been able to add and get caught up in terms of our secondary allocation and our credit allocation in the portfolio. And today it's sitting fully invested, and we feel positive about the future evolution of the NAV, given that we now have higher rates of return we expect from our equity, credit, and secondary positions across the portfolio.